A sharp surge in US Treasury bond yields to a 16-year high of 5% mark last week triggered a risk-off sentiment in global equity markets amid escalating tensions in West Asia. Analysts feel the markets have not fully factored in the rising friction in West Asia. Indian markets were no different, trading weak for most part of the last week. The S&P BSE index shed 885 points or 1.34% to 65,398, while the NSE Nifty 50 index declined a little over 1% to 19,543. Among the broader indices, even as BSE Mid-Cap Index shed 1.3%, the small cap managed to end a wee bit higher. Sectorally, the BSE Realty, Capital Goods and FMCG indices were the worst hit. Another sore point for the markets is the surge in crude oil prices beyond the $93 mark in the backdrop of the ongoing Israel-Palestine war. In the last fortnight, Brent oil prices have flared over 12%, data shows. Over the next few days, the market will continue to seek direction from global peers with an eye on crude oil prices. Stock-specific moves, meanwhile, are likely to continue on account of the September quarter earnings. The markets will remain closed on Tuesday on account of Dussehra.
If the crude oil prices are going to continue to be at elevated levels on a higher range, definitely it's going to have some kind of negative impact on the Indian economy in medium to short term. But overall, Indian economy is quite strong. We are in the beginning of the earnings season. So far, there were no negative surprises with respect to earnings are concerned. IT stocks have been given a guidance of flattish kind of guidance at this point of time. We had a good set of numbers coming from FMCG companies like HUL, ITC and Nestle have come up with a strong set of numbers. So overall, we are in the middle of the earnings season. Earnings season is going to drive the markets in the coming week. The good thing with respect to Indian market is at a lower range of the market, we are witnessing more about the buying interest. There is a stock specific action is taking place at this point of time. Capital goods, auto sector remains to be the outperforming sector in the coming weeks because of we can expect a good set of numbers from these companies.
This week, the earnings season is about to pick up pace with as many as 210 companies scheduled to announce their September quarter results. Prominent among these are Axis Bank, Jubilant Foodworks, Tech Mahindra, Asian Paints, Bajaj Finserv, Dr. Reddy's and Maruti. Technically, the market has entered a crucial phase, with the Nifty 50 quoting below its short-term moving averages. Going ahead, charts indicate that the Nifty may test support around its 100-day moving average at 19,400. The Sensex may seek support around 65,100 and 64,800, while it may face resistance around 65,900 and 66,200 this week. Similarly, the Nifty 50 index is expected to seek support around 19,450 and 19,400 and face resistance around 19,650 and 19,750.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.
He's making plans for an early retirement. Business Standard.